Hello guys, and welcome to this very short presentation. Today I'm going to be talking about Colgate Palmolive. Hopefully I pronounced that name correctly, but it's a very large multinational corporation that sells a variety of products that we're about to go into. So let's get this show on the road. Let's start off with what its business model is. It's a products maker. So the Colgate Palmolive Company is divided into four segments: oral care, personal care, home care, and pet nutrition. So let me just break down some of the things that this particular company does that you may have heard of, or maybe not. So they're known for a couple of items, most notably the Colgate toothpaste, as well as the Palmolive soap brand. They're also known for their pets brands for Hills, and of course there's plenty of other brands that you can look at when you look at their website, but these are some of the key ones that most people know about. Now let's talk about some of the key facts. So let's do a quick rundown. So this company, based upon reports from 2018 to the most recent annual report that was published in 2024, they make around $2 to $3 billion in free cash flow. So some years they're closer to 2 billion, some years they're closer to 3 billion, but it's generally around that range. This company has no tangible equity. So for the third quarter of 2024, which is the most recently published financial report, they had about $836 million in total equity against $3.39 billion in goodwill. On top of that, this company is a slow grower, so we can imagine for a company operating within the product makers field that the only way you can really make more money is if you raise your prices or if you sell more products, or else cut your expenses. There's only so much you can cut your expenses on, and okay, there's more people buying toothpaste, maybe more people buying food for their pets. We see that their pet nutrition's segment's like really the only segment that's growing in sales. But other than that, the markets for toothpaste, for personal care, for mouthwash, all those things, those are relatively matured. You're not going to see big growth. You might see 3 to 5% growth, but that's about it. So here are some of the pictures. So okay, you see that really their equity is practically wiped out from the debt. So there really isn't any. If you're gonna buy it, the company, let's say, just imagine for a moment you bought out the whole company. How much would you pay for it, right? And it would be nice if it had more assets compared to liabilities. But unfortunately, that is not the case. So again, $838 billion or $836 million against $3.39 billion in goodwill. So that means that if I were to subtract the $3.3 billion, then there's just negative tangible equity, which is, for all intents and purposes, for equity holders, pretty useless. Now, this is from their fiscal year 2023 annual report, which was published in 2024. So you can see that this has been a trend for a while, but this is like the most recent trend. So you can see that the pet nutrition, 19% to 21% to 22%. Meanwhile, the other segments are taking less of sales, not because they're making less money. That's not the case. It's simply that the pet nutrition segment is the fastest growing segment. So, kind of a quick conclusion. What can we draw from this? Well, okay, we got free cash flows of $2 to $3 billion a year. You have growth rates of between 3 to 5% we can probably expect, but there is no tangible equity, right? So this is the most recent numbers, the most recent ending stock price and the most recent market cap. So according to Google, thank you very much, closed on December 6th, so last Friday. The company made, well, okay, not the company made, but the company was worth $76.99 billion, so around $77 billion. So I'm not going to do an appraisal on this company, but I mean, in your opinion, do you think that a company that generates around $2 to $3 billion in free cash flow at a growth rate of 3 to 5% is worth $77 billion? Or, in other words, if you were to buy this whole company out for $77 billion, would you do it? Or would you not? Is there better companies out there? Who knows? So, of course, if you have any questions, comments, or concerns, or any ways to improve these videos, please leave them below. Thank you for watching. Bye.